Welcome to Profit Flow Analytics by New Cycle Trading and Analytics. Profit Flow Analytics was designed for traders to provide a simple, profitable set of signals for both futures and options traders. So welcome everybody. The Profit Flow Analytics chart has a depth of technical signals underlying the very simple single entry signal. It's taking the complexity of multiple technical signals and presenting it to the trader in a very easy to understand and easy to recognize format that now is the time to enter a position. It's designed for optimum profit opportunity. However, we all know as traders there will be losing trades. And the best course of action using this program is to follow the signals, and overall you should have a positive outcome. Just be consistent in how you follow the signals. Now, Profit Flow Analytics consists of two separate indicators. The first is the Profit Flow Oscillator, and it consists of looking for a blue bar to go long as a futures trader or buy a call as an options trader, and it presents to the trader a red bar to go short if you're a futures trader or to buy a put if you're an options trader. The Profit Flow Oscillator, which is part of Profit Flow Analytics, is our primary indicator to use for entries during the trading day. There's also the Trend Consensus Indicator. Now the Trend Consensus Indicator will trigger a trade entry based on two adjacent blue bars or two adjacent red bars, and we only enter on the dark blue or the dark red. And the third way that you'll enter a position is when both the Profit Flow Oscillator and the Trend Consensus Indicator are aligned. And I'm going to show you examples of all of those here in just a moment. Exiting a position. The most effective way to exit a position in our experience when trading futures is to use a trailing stop trigger. Now you can set that on your futures dome at whatever you choose, and it can vary depending on market conditions. It can also vary depending on time of day. The second way you're going to exit a position is a protective stop, which is basically exiting the position for a loss, but you've set a protective stop on either your futures trade or your options trade in order to curtail a movement against your position. And then the third way that you would exit out of a position is a signal reversal. So if you've entered a position and then you have either the Profit Flow Oscillator or the Trend Consensus indicators showing an opposite signal, you would close the position and reverse your trade. That is the other way that you would take yourself out of a position. These entries and exits are very, very easy to follow, they're easy to understand, and they're easy to recognize on the Profit Flow Analytics charts. Now, in terms of time frames, futures trading, based on our experience, is best using a 1 minute, 3 minute, or 5 minute chart. Our preference is a 1 minute for active trading throughout the day. Options trading for short-term expiration is best to use a 5 minute chart. So short-term expiration would be if you're trading same day expiration, next day expiration, or maybe 2 days out. Options trading for long-term expiration, which would be anywhere from a week to 6 weeks out, you're better to use a time period greater than 5 minutes. You can still use 5 minutes to help time the entry of your position. But if you see an entry presenting itself on, say, the 30-minute chart, and you might want to look at the 5 minute and just make sure that you time the entry. But all of those time periods work well for options trades and for futures trades. The futures trades, as I said, our preferred time frame is 1 minute. All right, so let's take a look at the chart. This is the Profit Flow Analytics chart. And what you see here is the price bar presented in the open, high, low, close format. We have a data window over here, which as we scroll through the chart is showing us what the value of each of those is, the open, high, low, or close on each bar. Here is your profit flow oscillator presented in red and blue indicators. And when there's a neutral or no action time period, it is presented to you in a gray bar. Here is the trend consensus indicator, again presented in blue or red indicators. And many times there's just blank space between the indicators, between the bars, which basically is saying to you there's no action to be taken based on the trend consensus. So if I was looking for a new entry, and what I'm showing you here is a 1-minute chart of the NASDAQ 100 futures. This is something that we trade every day. I'm looking for a blue entry bar. A blue entry bar would tell me that I can go long. I can go ahead and open a long position. A red bar is going to tell me that I can go short and open a short futures position. Now, some of the movements, especially when we get into time periods during the day, which are a little flatter than others, you can see there's a sideways time period here, sideways movement. Some of the movements aren't as great as other time periods. So this blue bar indicated that we should go long. The entry was at 76.16.75. It moved up to a high of 76.20.25. That's enough to take a profit, lock in a profit if you decide to scalp and manually exit the position. Scalping is also a valid method for exiting a position. If you see that the position is locked in a profit, you have 2, 3, 4 points of profit, you can convert the position to a no-risk trade by locking in either break-even or a small 1-point or 2-point profit. And then if the price continues to move, you get the benefit of that by your trailing stop trigger kicking in. Other time periods, you're going to have a much bigger movement. So here's a short position. It's indicated that we should go short. We would enter at 76.04, and you can see that it moved actually down to a low of 75.87 before it triggered a reversal. And so if we were not already out of the position through our trailing stop trigger or scalping method, then we would be reversing the trade and we would take ourselves out of that short position for about a 17-point win, and we'd be into a long position, which reversed then. We're in at 75.87 and a quarter, and it went up to 75.94 and a quarter. So there's another 7 points. So in back-to-back trades there's a 17-point move down, another 7-point move up, and these signals present themselves to the trader all day long. The trend consensus indicator is slightly different, but still very, very simple. With trend consensus, you want 2 back-to-back blue bars or 2 back-to-back red bars in order to enter a trade. Now, you'll see that some of the red bars are a light red and some of the blue bars are a light blue. It doesn't matter if you have a light blue followed by a dark blue. The dark blue bar is your signal to go long. If you have a dark red followed by, if you have a dark red that follows a light red, it's the dark red bar that is your signal to go short. So it doesn't really matter how many light red or light blue bars you have in a row prior to your dark blue bar, but you want to take the trade based on the dark blue or the dark red. So here, for example, is a trade that you had a light red. That's telling us that the underlying technical indicators are setting up for a trade, but it hasn't fully confirmed yet. This is telling you the same thing. Now the dark red comes on and we are fully confirmed, so we would go short on that trade. The third method of entry, which I mentioned, is when your profit flow oscillator and your trend consensus indicator align. Here, right here, is a perfect alignment. You have a signal to go short on your trend consensus, and simultaneously you have a signal to go short on your profit flow oscillator. This is a great example of a trade right here. These trades, when they are aligned, can be a very powerful movement for you, very powerful, profitable movement for you. A very conservative trader might wait for that alignment. It's not what we suggest. We suggest using the profit flow oscillator primarily for your entry, but pay attention to the trend consensus. When that lines up, you have a strong move that is likely coming. And just as an example here, this move, which we would have entered at 76.27 and a quarter, actually moved down to a low of 76.0850. So you're approaching 20 points of movement on an index where a futures trade where each point is worth $20 on a single contract. So 3 methods of entry: profit flow oscillator, single blue, single red. Second method of entry is 2 back-to-back red or 2 blue bars, but enter only on the dark red or the dark blue. And the third method of entry is when you have the trend consensus and the profit flow oscillator aligned. I'm going to look at a 5-minute chart, and you're going to see it looks exactly the same. There's no confusion. Shouldn't be any complication about taking those signals off of a 5-minute. If you decide that you want to trade a 5-minute chart, you're not interested in trading the more rapid-fire signals of a 1-minute, there's nothing wrong with that at all. These signals work equally as well. Here's a great example of a signal to go long. It's not a qualified trade on the trend consensus. That comes the next bar, but it is a qualified trade on the profit flow oscillator. And in this case, you would be in the trade at 76.10 and a half. Actually ends up going all the way up to 76.71, or sorry, 76.92. So you've got about an 82-point move to the upside. That's a really sweet trade right there. All one trade off of a 5-minute signal. Here's a signal to go short. You can see that movement lower. The signals work no matter what time period you're going to use. If you pull out to a 30-minute time period and you want to use a 30-minute to trade options, those time periods and signals work very well also. So that's as simple as it is, folks. If you have questions about this, you can certainly email us at charts@newcycletrading.com. You can also inquire during the Options Moneymaker Q&A that is hosted every other Wednesday. And if you are part of the Options Moneymaker live trading room, those folks will be available to answer questions for you during the trading day in the live trading room. I hope you're super excited about using the New Cycle Trading Profit Flow Analytics. It's an amazing program, and I think you're going to really enjoy the profits.